You know what? I never believed it, but people said a year or so ago that the VIX is broken. And it's a very important tool. And I want people to learn about it. It's not as simple as knowing a number and buying it because you think it'll go up or selling it, selling vol. It's really looking at the plumbing. And I've one of the best VIX specialists out there with us today, Jim Carroll. Welcome to TradeGateHub. Great to have you here. We've talked a few times. Jim's a portfolio manager for Ballast stock, and he specializes in momentum and volatility strategies. Welcome here, Jim. Good to have you here.
Thank you, Coach. Pleasure to be here. I've always appreciated the work you do, and glad to help out any way I can.
Yeah, and you know what grabbed my attention, I wanted to bring in here. I talked to you a few months ago, and you came up with a new indicator called the Vixometer, and I saw on X before before Monday that you were telling people at least be a little careful because people were getting real aggressive, and your work was telling you, and that's how uh, you implement it in managing a portfolio. Does what you're getting from the Vixometer and the other things you look at give you an idea of whether or not you want to be 80% long the market or 60% long the market? How do you utilize your volatility strategies in managing a portfolio?
Sure. Yeah, that's a great question, and um, it really depends on who I'm working with, what we're trying to accomplish, what the time frame is. No two investors are exactly alike.
Okay.
Um, but for me, the work I've done with VIX and volatility um, is helping me better understand kind of market conditions, headwinds and tailwinds.
Right.
Um, Somebody can be a, buy and hold investor, but they're still going to be subject to the gyrations of the market. And so if I can talk to a client and say, we've had a great run here. We might anticipate a little rough water. We don't need to change anything, but just recognize that, markets don't go up in a straight line all the time.
Right.
Although recent history would suggest that, and again, we're in one of those periods where the market says, just own the S&P 500 and keep your mouth shut. And you and I have been around long enough to know that we do go through periods like this, and at some point they get upset. 2022, was a year where we saw stocks and bonds not behave properly. And again, depending on what we're trying to accomplish with a client's portfolio, it may be as simple as just saying, brace yourself. Don't freak out. Don't panic. We've got a
Okay.
plan in place. Um, the flip side of that is, for more active accounts, there may be things that we actually do, and not necessarily just based on what's happening with VIX and volatility, but
Okay.
it could be a model that has a rotation element or a momentum relative strength element to it. Um, so again, it really is it's a tool in the toolbox that, helps me have a better sense of what market conditions appear to be, and for more active strategies, actually dictates, being long or short various things.
Okay. Well, it sounds to me like it's very important for you to mentally prepare your clients for that possible situation so that if people expect it, they don't panic.
Exactly.
And okay, so that's part of it. And also with what you're talking about with the VIX, that there are opportunities to take advantage of that type of volatility. Now, to me, Jim, the character of the market really changed. You could go back to last August, but I really think it changed this December when we
Hmm.
had that bear raid in December, because it changed the charts for me. If you look at a chart prior, it was kind of like a nice, really beautiful uptrend. And now we're having the big ups, the big downs, violent market. I was taught that markets top with violence and
Hmm.
bottom in silence. And we're certainly seeing violent action in the market. So the guy who owned the SPY and played golf for 3 years may have to get a little bit more tactical, and that's where a guy like you can help people out. When the market's going up, everyone's a genius, but when conditions change, they need guidance.
I couldn't agree more. And, that's why I do what I do.
Okay. All right. Well, you're the vixologist, so I understand you brought a little presentation. You always do such nice work. I learn every time I listen to you, Jim. So I'm glad to bring you to this channel and the people that follow it religiously. So they're going to learn today. So let's roll.
Great. So I'm going to share my screen. Hopefully you are seeing a slide that says
Got it.
Vixology and the Vix Mix.
Yes, got it.
So, I have a little bit of the backstory. It's I laugh every time I tell it. It was back in 2015, almost 10 years ago. And the Schiller PE was high. Stocks looked expensive. It didn't look like interest rates could go any lower. And so I was searching around for something that I could add to portfolios that would be an uncorrelated return stream. And I tripped
Got it.
over this whole volatility complex. And at that point in time, Wall Street, as it is inclined to do, had invented some new products coming out of the global financial crisis, that gave you the opportunity through an exchange traded product, either a note or a fund, to go long volatility or short volatility. And to put it in context for people, um, you are long volatility or short volatility in your portfolio one way or another, even if you don't understand what that means. If you own
Good point.
stocks, you are short volatility. Those stocks behave less well when volatility rises. And so, most people don't really understand the importance of that. But, I did a deep dive and got very involved in trying to look for a systematic way to use these exchange traded products to add a little something to portfolios that wasn't there before. So, I got involved in this space, almost 10 years ago. And the most recent, you know, uh, effort coming out of that is this Substack called Vixology and this composite indicator that I call the Vix Mix. So let's
Okay.
talk about that. And I have to say, nerd alert. Although I'm not going to talk about option Greeks, there is some math involved. This is not your plain vanilla subject matter. Um, I'll
Okay.
try not to be too nerdy.
We have a lot of pros around, so Jim, they're
Well, the
looking
pros,
they're looking
yeah,
to grow. They're looking to grow.
and to be fair, a lot of people who are really deep into the volatility space, options trading, futures, look at what I do, and gee, Jim, is that really the best way to do this? And my response is, look, you're one of the smart kids. You do your thing, I'll do my thing, and I like using the exchange traded products. My little pond is too small for the big kids to play in, and I like it that way. So,
Okay, you
uh,
know thyself.
know thyself. So the VIX mix is a composite indicator of bullishness and bearishness through the lens of volatility. So I'm looking at different measures of volatility to kind of distill a market condition. I show that on a daily basis through this little gauge. This was yesterday's close. Uh, it ranges from 0 to 100. We've never had a 0. We've never had 100. And right now, my indicator is suggesting that we're in the red. We're in bearish territory. Does that mean
Okay.
things are going to get worse? Not necessarily, but things, and I'll pull up another slide here. This is a snapshot. This is, where we are as of the close yesterday. Now, I can lay that out, and what this does is it goes back to early 2024. It's basically, a trailing 12 months showing the S&P during that time period and what the daily readings of the VIX mix were. And you can see during that time period, there's not a lot of green here.
Yeah.
Interestingly, there were some bullish periods, back coming out of the April 2024
Yeah.
pullback, toward the end of the year when we got bulled up again. Um, but you can also see that, there were some spots where, we went from bullish to neutral to negative, and, you
Quite a few
know,
times.
quite a few times. Yeah. And it doesn't always mean the end of the earth if we go bearish. It just means that, under the surface, people are concerned about something and they're hedging or they're taking some bearish positions. They don't necessarily get to win all the time. Running into the period up into the election, unsurprisingly, there was a lot of hedging going on. There were a lot of people concerned
Yeah.
that the election might result in a bunch of turmoil. It turned out to be, a big nothing effectively. But it wasn't surprising to me that the VIX mix, this composite indicator, was showing people getting a little bit bared up. And obviously,
Yeah.
that sentiment reversed very quickly once the election was over and it was clear that, the world was not going to come to an end, at least not yet.
So
Um,
I noticed on this recent rally though, almost to new highs in the S&Ps, it hasn't turned positive. It's just moving back and forth between neutral and negative. Is that a market tell in a
well,
way?
what it says to me, Dale, is it says to me that, folks are not convinced that, we should have the green light on.
Okay.
And again, coming out of the election, there was kind of a sigh of relief
Yeah.
coming into the inauguration. And then, everybody's okay, now what's Trump going to do? Because he had been talking tariffs, he had been talking,
Yeah.
Doge, he had been, doing all this talking. What's he actually now going to do? And as we've seen in the last week, he's going to start ruffling some feathers and tipping over some cows. So to me, the fact that we did get back to new highs in the S&P during this period, I'm not surprised that we didn't get the sentiment all the way back into bullish territory. There were still people saying, "Hey, give it a minute. Let's see how he rolls before we pull all the hedges and go balls to the walls."
Okay. Would you prefer, would it be more bearish if we made a new high and then turned green, like later? Do you
Well,
want to fade the optimism and the pessimism, or do you want to go with it?
well, I think there are times where fading in either direction makes sense, or let me put it a different way, at least leaning in a different direction can make some sense. And I've got a couple of
Oh,
pictures to
go
to
ahead.
show that.
Okay, buddy. Thank you.
So zooming in, This is the July, August of last year.
Yeah.
And this is an example, where the July high in the S&P coincided with essentially a little pullback in the VIX mix. It had been green, it had been supporting the move higher in June and July. But when we got to the high, it was not green anymore. It had turned yellow. And
Huh.
so, this was one saying, okay, we're at an all-time high, but this VIX mix thing has shifted from green to yellow. Maybe we need to be paying attention. Um,
It's like a
and
non-confirmation.
it's a non-confirmation, it's a divergence.
Okay.
So to
Love
me,
that stuff.
it doesn't say, abandon ship, but it says keep your eyes open.
Yeah. Get your
It's
dinghy
some
ready. Get your dinghy ready, right? All right.
something may be going on.
Okay.
And what we saw that initial decline. We saw a little bounce, a further decline. And at that point, even on the first bounce that we got, VIX mix had already turned bearish.
Yeah.
And we had another little rally into the end of July. I remember it vividly. But even into that rally, which was
Yeah.
2% from the low to that swing high, we were still bearish. And we most people remember what happened after that.
Yeah.
Blame it on the yen carry trade, blame it
Yeah.
on the dispersion unwind, blame it on a crypto hedge fund getting a margin call over a weekend. Um, what this says is you had an 8.5% drop in SPX. And if you've been paying attention to this indicator, you at least might have been paying attention.
Been less long too.
Been less long, take a short. Again,
Yeah.
we'll come back
Yeah.
to some things you might have done.
Okay.
So a lot of people want to know, okay, so what's inside this composite indicator? What's inside the VIX mix? And so let me take you on a little bit of a tour. I'm not going to cover all the pieces, but I'll hit some highlights. So inside the VIX mix, one of the things that we monitor is the VIX itself, measured by its trend. Where is the VIX relative to its history and its trend? So the way we do that is by, again, looking at the VIX relative to some moving averages and how that trues up against essentially a 10-year look back. So, if the VIX is, way above trend or way below trend, it tends to revert. So what we see here is if we go back to early 2024, we were just right around that zero line because the bottom panel is looking at standard deviations away from um, the Z-score. And so, if you're in that zero range, it means, the VIX is just kind of mushing along. That's supportive of the S&P going higher.
So that was
It
a smooth uptrend because there weren't many wiggles in the
smooth
VIX.
up, smooth
That's when
uptrend.
people were saying it's broken
Right,
because it's not doing anything,
right,
which are two different things.
right. It did roll over coincident with the April pullback, and then turned around again. Now, again, here's what's interesting about this one is that going into that high in the middle of July, you had this non-confirmation, this divergence from the VIX, where that red arrow is, sloping downward. And so, again, that's one of the elements that adds up to that bearish reading or neutral to bearish reading that we were getting.
Okay.
And then, it it went down hard. Recall that,
The same day.
That August 5th spike in the VIX took this measure down below 3 standard deviations from normal.
It
We
traded
don't get,
60
yeah,
pre-market that day.
yeah. We don't get to 3 standard deviations away from a normal very often.
Who sold the
Um,
vol up there on the opening, Jimmy? Was it the Fed? Who sold vol up there that day?
I
Hear any
don't know that any
stories?
I don't think anybody did, and that's why it reverted. I mean, nobody could play. It was just out of control.
Yeah.
Um, and it was it, there are people on both sides of the argument. Did it really print that? Well, the answer is yes, it really did print that. Was that a good print? Well, it turned out to be, uh, uh, a very temporary move.
Very transient
Very transient. Yes,
tick. It
indeed.
was a
Right.
tick.
Right.
All right, go ahead, bro.
So that's a piece of, the VIX mix puzzle. Um, Also looking at the VIX itself, and this goes back to work most prominently done by a friend of mine, Andrew Thrasher, who published an award-winning paper on, you know, uh, what I refer to as the VIX squeeze, but it's really when things get quiet, too quiet. Um, and so, again, we're back in 2024 in June and July, and the S&P is the green arrow, just marching higher, easy as could be. Meanwhile, the VIX down below is trading in such a narrow range that, and this is, again, nerd alert, this is where the Bollinger Bands,
Yeah.
a measure of volatility of a price series, are trading inside the Keltner channels, a slightly different. One uses standard deviations, the other uses average true range. But when you get in this condition, and it can last a while, as you can see here,
Yeah.
from June through the middle of July,
Yeah.
the VIX was just trading sideways in this very, very tight range. And
Because of look how orderly that uptrend was.
very
That's why.
orderly uptrend, very little realized volatility. So, everybody's just calm as can be. And, what this says is, okay, let's pay attention because, oh, by the way, nothing is always and forever, telling the truth. But in this particular circumstance, you lost that squeeze right about when the S&P had hit its high. And so again, if you were paying attention to this particular set of circumstances, you would have had a little bit of a heads up before the end of July. Now, what do you do with that? Well, that's up to you. There's no one size fits all. But, whatever you do when volatility is expanding as opposed to contracting is what you could have done in this scenario based on this piece of information.
Jim, also what I notice, and tell me if it's more than this instant, but before we reached highs in the S&Ps at the end of your green arrow, the VIX was already turning up and looks like it had several days up before the market even peaked. So it was smelling out something prior to the top. Is that the edge of following the VIX that you get market tells before the market even knows it?
It certainly can be, Dale. And again, for every one that works, we can find one that didn't.
Okay.
But to me, the convexity is when it works, when it tells you to do something. The win can be enormous, and when it's a head fake, it looks like it's breaking out and then it dies. Okay, did you lose a couple bucks? Okay, sorry. Um, when you if you can catch a move like the one we saw in, July, August of last year, that can be retirement money for some people.
Yeah.
Okay, VIX futures relative to spot VIX. Something else we watch.
Okay. They trade the
So
futures at the CBO or the
trade the
CBOT now.
futures. Yep.
Yep.
So in normal circumstances, the relationship between spot VIX and the VIX futures, spot VIX is typically below the futures. Why is that? Well, because the futures have a premium built in. They're a form of insurance, and so you got to pay for insurance. And as this chart shows in the green boxes, when the S&P is marching higher, that spread is positive. The futures are above spot. Now, when that rolls over, goes negative, that coincides with a market that's,
Sellouts.
correcting, selling off.
Okay.
And, this yellow box that is the that is July of 2024, again, even before the really bad news came out, we had, several days when VIX was trading above the VIX futures.
All right.
And
So
I'm
is this,
using,
I'm sorry, Jim. I was just
uh,
saying, is this a way to measure backwardation?
it doesn't even have to be backwardation. What
Okay.
this is doing is the VIX is a 30-day measure of implied volatility.
Okay.
And one of the tricks with comparing that spot VIX measure to the VIX futures is the VIX futures are contracts that expire every month. So every day, there are fewer days to expiration, and it's the front month is converging with VIX because at expiration, that future and the spot VIX are the same. So what I use is essentially an interpolation. I use the front 2 months and change the weighting every day so that I have what is effectively a 30-day measure of the VIX futures. And so I'm comparing 30 days of VIX futures to 30 days of VIX to give
Got it.
me, a like kind measurement. And when that goes negative, it tends to be um, rough waters. And when it rolls over and heads negative, or in this case where it has registered a negative in that gold box, as the S&P was continuing to march higher and make new highs, we were seeing this thing go negative, and it's not supposed to do that. So again, this is one other of the
Another tell.
signals. It's
Another
another
tell.
tell that says, look, maybe it's going to be fine, but if you're not paying attention, then that's when you get hit upside the head.
It's your edge, Jim.
It
What
can be an edge.
your work, not that no one ever gets 100% signal reliability. If you're, but this is what you see as the plumbing in the marketplace, and it's your edge because a lot of people don't even take the time or energy to really have an understanding, yet alone make up their own kind of proprietary indicators to do it. And um, that's what my simple thing was when the VIX was heading up, while the market was steady or acting good. To me, it was saying someone's buying insurance. Um, there's
Yeah, and I
something
don't,
afoot.
yeah, I don't
So
have the chart in this deck, but a prime example of that was what happened in January and February of 2018. because the S&P was, running high. And, starting in the middle of January, all of the VIX indicators that I look at were sounding alarms.
Yeah.
VIX was going up with the S&P. That's not supposed to happen. People were getting nervous. People were putting hedges on.
Yeah.
And anybody who was around in February 2018 knows how that ended. Not well.
Yeah. Yeah.
Let me hit a few more. So this is just using that same VIX 30 measure, constant maturity, and saying, hey, what if we just tried to, swing trade this thing? And so, this just shows levels and a couple of moving averages. And, again, um, if you use this as a way to kind of gauge, are we in bullish mode or bearish mode, it can, provide some value, in my opinion. Here's one that I really like, that not too many people pay attention to. So, the VIX futures have a series of contracts, and there are a couple of indices that have been developed coming out of that. One is a short-term VIX futures, and the other is a medium-term VIX futures. So the short term is looking at the first couple of months, and the midterm is looking at months, 5, 6, and I think it's 4, 5, 6, and 7. So what a lot of people don't pay attention to is that these things, will behave differently, because the front end of the term structure is going to be more responsive up and down than the middle, because the middle is out 4 to 6 months, and who cares? And we have tradable products related to both of those. I'm using VIXI here as the short-term VIX futures. So you're long the short term here, and midterm you're long with VIXM, something that most people don't pay any attention to. And the reality is that VIXI, the short term, is going to respond faster than the midterm, than VIXM. So who cares? Well, if you go back to the bottom in late October of 2023, that was followed
Yeah.
by a glorious
Yeah.
run up in the S&P.
Yeah.
What you see is that when that was going down, the green line, which is the short term, was going up, and it was going up more than the midterm, as we would expect. The short term VIX futures is going to go up faster and go down faster. And certainly, when we saw that reversal, what we saw was that VIXI, dropped like a rock and went down faster and further than VIXM, which is the medium term. So if I take the ratio of those two things and map that out, what I can see is that, again, going back there, that ratio, which is in the middle panel, S&P 500 in the top panel, the ratio in the middle panel, and the ratio with a couple of moving averages plotted, you can see that that ratio flipped to bullish the same time the S&P flipped to bullish, and, essentially stayed bullish depending on the noise level you want to dial in, all the way up through March into April.
Yeah.
Again, this is another component of the VIX mix. Is this thing bullish, bearish, or neutral? And, as a potential signal generator, to me, this thing, has demonstrated some value over time.
Great presentation, Jim.
And this is wonky. This is one that not a lot of people pay any attention to.
Those are the ones you want to pay attention to.
Yeah, and if we go back to, again, last August, July and August, you can see that VIXI crossed over
Yeah.
VIXM in the middle of July, just as the S&P was, making that high and turning around, turning down, and, you know, just kept going up faster than the midterm. So,
Yeah.
again, this was one that not only, could have been used as a signal, but, might have kept you in the trade even when the S&P bounced into the end of July. You can see that, VIXI was still outperforming VIXM.
Jim, I'm starting to think that the VIX is really kind of a harbinger for everything that is happening here. And it's almost like the VIX is the nerves of the market.
Well,
You know,
if you think about what the VIX is, right? It's a measure of the activity of S&P 500 options,
yeah,
the deepest, most active, options market in the world. And so, if VIX is kind of the thermometer of that most active options market, it might make some sense to pay attention to it. Does it feel
that,
like it gets broken from time to time? Do
yeah.
we now have zero DTE options that are muddying the water? The answer to all those questions is yes. Again, nothing's perfect, but to me, the VIX is not broken. You just have to keep it in proper context.
All right, really a great presentation, and I know, Jim, people are going to want to follow your work. Of course, on X, it's at Vixologist, but why don't you show also that you're a money manager and you handle accounts with this type of market philosophy? How do people reach you?
So it's easy to find me on X at Vixologist, and you can also find me on LinkedIn, and a number of people have connected with me there. And Ballast Rock Private Wealth, you can go to the website and track us down as well. I'm generally available to people who have honest interest and behave well.
Okay. And do you also have something written on Substack, right?
Yes, vixology.substack.com,
Okay.
where the VIX mix shows up on a daily basis. And I periodically will do what I call deep dives, similar to the work shown here today, that goes into some of the plumbing, as you refer to it.
Jim Carroll just proved don't nix the VIX.
I might
And
have to steal that one, Coach.
oh, you got it. I have, no copyrights on that one. And always great talking to you and great seeing you for the first time, Jimmy. All right. So have a great week, great month. And this is also recorded because you know what you did today? You did a tutorial on the VIX, and I think people could learn a lot. They'd probably have to watch it more than once. But I want to thank you for edifying our community today, Jim.
My pleasure, Coach. And
Okay.
stay safe and warm out there in the promised land.
All right. My trading warrior brother, Jim Carroll, follow him and find him. That's a wrap, everyone. Adios. Thanks again, Jim.